about potentially, don't know if you were taking notes, but I was, some support levels such as, around 22,500 and around 22,200. Now, if you're worried that it will pull back from its current level of 23,395, this was where it ended during Singapore's trading hours at 5 o'clock. What you can do on the Singapore market with this warrant, Nasdaq put warrant listed on SGX, is you then put in your target level, right? Because when you trade warrants, you don't just buy and sell blindly. You need to know what are your entry and exit levels in the underlying itself. You must first have a view on the underlying itself. So in this case, you type in 22,200, for example, because you worry that the index could pull back as much as 5%, in the short term. Now, the next thing you do is you increase the number of weeks because you want to use this tool to simulate the kind of returns you can expect from this warrant, right? Right now it costs you about 3.1 cents. There's only one Nasdaq put warrant here, in this case expiring on 19th of December. So it costs you about 3.1 cents now. But if the index were to come off 5%, overnight or maybe over a week, this warrant will grow by about 35.5%. Again, what you're seeing here is this warrant moving about 7 times more than the index. So it's not only just gaining to cover your loss in your portfolio of shares, but it's more than gaining more than the drop of around 5% on the broad index here, in this case 35.5%. But if you held it for 2 weeks and the market came off 5% in 2 weeks instead of a week, then you notice that the gains are actually less now, right? It's dropped from about 35.5% to 25.8%. Why is that? That's because all leveraged products such as warrants come with holding costs, whereby the longer you hold on to it, the less returns you're going to get. But they're still magnified regardless, right? So this tool is telling you, okay, based on the 5% drop, these are estimated returns based on your holding period. Okay, and you can see, as I said, the longer you hold on to it, or rather the longer the index takes to realize your view, your target exit view, the less money you make. Okay, so what you really want here is to know what your maximum holding period in this tool is. Okay, at this point, I have to say warrants are not like shares, whereby you hold on to them, for years, for decades until you get your view right. With leveraged products, they are all meant to be short-term trades only. And how short-term should it be? Well, this tool was designed to help tell you. In this case, you don't want to hold this warrant for more than 4 weeks, because holding it for more than a month means that even if the Nasdaq was down 5%, you're only making about 3% return. And if you held it for 6 weeks, you're actually losing money, right? So you can see leverage products, come with, its attraction of, giving leverage gains. But if you actually don't use tools to tell you how long your holding period should be, then you're going to end up losing money. Okay, so I repeat, based on binni's view that there could be a support and the market could, if it pulls back, might potentially find a support here, then your maximum holding period using a Nasdaq put warrant, for example, is only about 4 weeks. But of course, if the Nasdaq keeps coming off, goes to 22,000, then you can afford to hold it for more than a month, and it's still going to generate you returns. Okay, I'll just quickly use another example. In this case of a call based on Hang Seng Tech, which binni talked about. It's a laggard, and I think in bull markets we're always looking for laggards, to try to catch up. In this case, if you think that the Hang Seng Tech could catch up, in the interim, and go up as much as 6,000, which is the resistance level that we could see some selling. Okay, in that case, it's again not that much higher from where we are really, because obviously this week it's moved a lot. If you look at the end of June, for example, which is around just slightly above 5,000, but of course it's gone up, to now about 5,700 when it closed at 4:30 p.m. today. Now, if we think that we missed out, right? We missed out on that run, but binni says that maybe got more legs to run to 6,000, and we therefore want to be very cautious rather than put in a large sum of money into a ETF that tracks Hang Seng Tech. We can then use only a small amount of money. How small? Anything ranging between 4.2 cents to 8.5 cents. Those are your options here. 2 Hang Seng Tech call warrants, which cost very little. And if you only wanted to leverage on a 5% gain, again, some of you are saying, 4.5%, 5%, not much. Well, that's where you can use warrants to leverage, right? And magnify it. In this case, can you see that, if the Hang Seng Tech were to go up 4.6% in a week, then these warrants will indeed magnify your gains. They will go up by about 32.9% to 42.9%, and that's about, about 7 to 8 times more than the index itself. So you are using, could be a very small upside only in terms of percentage, but you can use call warrants to magnify it. And of course, a 4.5% move in a week is nothing. The market has been moving 4.5%, in 3 days, right? So obviously, the shorter the period of time the Hang Seng Tech Index takes to get to about 6,000, which is your target exit level, where you want to exit and see if it pulls back and before you go in again, then you're going to stand a chance to make about anything between 33% to 43%. Hold it for longer. Again, what you're going to see is that this second warrant here will not make you any gain by the third week. So this is something you just want to know. And if so, then this selector tool helps you to narrow down your selection to only this warrant here. And you can trade this warrant instead of this warrant because, you want to be a bit conservative. You want to give Hang Seng Tech a bit more time to make that run. For example, you see that in 5 weeks' time, the second warrant has already expired, but this first warrant can still make you 9.4%, which is just about 2 times more than the index move. So, then you will not want to narrow down your search using this tool. In this case, go for this warrant MPKW to trade the Hang Seng Tech instead of directly trading Hang Seng Tech itself. I hope this demonstration is clear so far.
I think it's clear, Jamie. From what you've just explained, I can see it as a put warrant could potentially be a hedge in a very high market. That's one thing. The second thing is that where a lot of stocks are very expensive, then they might want to consider to take positions using a cheaper tool. Of course, then we cannot stay in warrants for a long time. I mean, we can't hold on to a warrant for a long time. I think that's the key takeout here.
Yes. And I mean, at this point also, I think for people like myself, we're missing on the bull market. This could be the start, right? Or it could be the mid, or it could be the end. But the problem is when stocks are already moving so much in such a short span of time, I think those who are always a bit worried about being caught at the tail end of this bull, right, will always think then, I just want to go in very cautiously. And that's when I think you can use a tool like warrants, to go in cautiously. Why? Because they require a much smaller capital outlay compared to the stocks itself. But that's something I'll cover later. I think the question is, clearly to use such tools such as warrants, you need to have a view, right? And which is why we want to listen to people like Binni, the experts to tell us what kind of views we can have and what are the key levels to look out for. So I guess my
I
question
will
back to you,
continue.
Binni. Yes, can you just provide, more names, more levels we can look at, and then from there I will, go on and continue with examples of using warrants to trade those views that you might have.
Yes. All right, let's continue. So what I did is I prepared two. One section it would be those stocks that already broken out and how do we look at them? How do we trade them? And what are the key levels? And the other one would be laggards, those stocks which to me they built certain technical patterns and then they hasn't broken out of its all-time high. So as expected, the first one would be DBS. Right. Today, DBS went up about 2.24%. I just want to talk about that the chart here, the levels that are presented, they are adjusted for dividends, meaning that assuming that you are paying, you have paid and received dividends. So these are the prices here. So if it hasn't been adjusted for dividends, then the price would be slightly a little bit different. Now, the what I have here, it's also outdated prices because as you know that DBS went up this 2 days from about 447.50 high, and then right now it's trading at 49.21. So same thing, what you have to do is to go to the chart and then mark the all-time high or the high that you can find. So these are the all-time high, and hopefully you hope that it can retrace back down to that all-time high. So if you are using a chart that's adjusted for dividends, that's about 45.60. If you are not using a chart that's adjusted for dividends, the all-time high breakout level is 47. Now what I've listed here is a resistance at 50. Now this 50, because DBS is hitting its all-time high, we can use tools to project, but 50 is a very important round number because round numbers in technical levels, they are very important, like numbers like 10, 50, 100. That's where we see people pausing and think that, oh yeah, it crossed the 50 level or cross the 100 level. All right. But that having said that, if DBS can close and cross that 50 level, we might see it going higher. But at least for today, I think that we'll be seeing DBS at 50 levels as the key resistance for now. Okay, so DBS would be one example of breaking that all-time high. So same thing if you have if you have stocks that if you're interested in stocks that breaks that all-time high, you just have to look at that breakout level, and then that breakout level becomes a support level, and that potentially will be one level that you want to look out for. Now, the other stock, which is this CATL. CATL is listed in the Hong Kong Exchange as well as listed in the Shenzhen Exchange as the world's largest EV battery producer. Recently listed, and you can trade or take a position in CATL using warrants. So today I'm just going to take a look. Now, the reason why I want to have a look into CATL is because that's the Shenzhen exchange price. That's the primary listing. It's right now showing this consolidation pattern. This pattern is about 184 bars. It's about an 8-month base, meaning that it has been basing, all right, for about 8 months for now. Okay, now why is this base important? It means that traders would be looking at a breakout. So if it can break out, like break out of all this high, then there is a potential for it to go higher, especially if it can break out this all-time high here. So we are looking at CATL in Shenzhen, the stock price to break out. It's probably around that 295 level, but it's tough to take a position in the Chinese stock exchange. So with the dual listing, let me just take a look at the Hong Kong side. So the key level today, CATL actually moved down. And yesterday I was discussing with Jamie that the resistance level would be around 435. So it's stopped at 435, and today it's trading on close about 428, all right? And the support level here is about 339. So these would be that support level here, right? So later, if Jamie has something to share, let's see whether she has on this one here. But then let me just briefly say that at this support level, we are looking for a rebound to see whether price can move up, and that's where the call warrant can come in. And if you think that there is a resistance here because today actually moves down, and that's where a put warrant can come in. All right, so let me just pass this to Jamie to see whether she has anything to add before I talk about the laggards.
Well, so yeah, so just to summarize, well, what Beanies has just shown us is basically two incredible stocks with, which has moved a lot. I mean, you just only have to look at the chart, it's just massive, like nice line up. Like DBS, for example, I mean, I wish we did this. I always wish we did these webinars sooner, because these levels that Beanie shared, like I had a look at it before today's move, where it is now, ever just a few cents away from the 50%, $50, all-time high,
I
new
prepared
all-time
my
high.
slides last week on Monday. Yeah, I mean this Monday.
Yeah,
So I had in fact to revise the slides twice because the price actually moves
yeah,
quite
but it's
fast. Yeah.
it's incredible, because I think maybe just last year, DBS had already been gaining very good ground and momentum. People are saying $50 a bit hard lah, they just aim for 45, 48, and here we are, $50. Just in April it was below $40, right?
Yes.
So again, if you are like majority of Singaporean investors who hold on to DBS because, well, every other neighbor I know holds on to DBS, right? It's the bank that every Singaporean goes to. And now you're a bit worried because everyone's talking about this $50, a level that previously people said impossible, but now it's there, and you're also wondering, is it going to go above? But at the same time, this stock has paid you extraordinary dividends and continued to go up, and you think it's a good stock, and you're seeing all the flows into Singapore. You wonder, you know, yeah, it's probably going to go up. You're not willing to sell yet, but you're just worried in the short term whether it could pull back. Well, this is where you really want to note support levels, right, and resistance level. So I think I've just seen on the chat, Lynn, she actually said, oh, she's a little bit confused, trying to learn this support resistance levels. Well, I think just to be clear, when you trade warrants, you first of all need to have a view on the stock itself. You need to know where the support and resistance levels are because they might guide your entry and exit. I mean, there are some people who buy anyway and then like they just hold on to it without really knowing where they should exit. But as I've demonstrated, warrants are a short-term trading product. So you really need to know where are the levels you want to get out at. You're basically saying that it could be a nice trend, but I'm a bit worried. I just take my money out first and then I'll go in. And this is what people call, I guess, swing trading, position trading, where there are those who, those stocks that you just buy and you hold it for a long time. But then there are those stocks, again, in this current market where DBS is already close to 50 and, either you missed out or you think, how can I still continue to potentially profit from such key levels? And if so, then again, you can use warrants. Well, there are two ways to use it. Of course, if now, you're a shareholder and you're worried, it's $50, nice whole round number, all-time high. Could there be some profit taking for other investors? Then you want to look for a support level because then even though you're long in the shares, but you think it might pull back in the short term, you look for a point where there could be people buying again, before the stock could potentially break another new high. And where people are buying again is where if you bought a put warrant, you want to exit because you think that's where the stock could rebound, and hit higher. Okay. So in this case, binni has just provided levels of resistance at $50, so potentially some selling there, and then support at 45.50, which is potentially where some people could buy. So there are two ways around this. Either you wait for DBS to come down to around 45.50, you buy a call warrant, or if you're, like I said, holding shares, you're a bit nervous at $50, it could come down to 45.50, or maybe it could come down more, you're a bit scared. Then you can use warrants in this case. Okay, you
Yeah.
can use a put warrant.
Yeah.
So I will show you, I mean, this was a selector tool. So again, to repeat, you come to warrants.com.sg. Now, warrants are like shares. They're traded on your broker, okay, the brokerage that you use to trade shares. But you use this website to simulate the returns and to find out how warrants will perform so that you can then type in, your orders onto your brokerage screens. So now we're talking about DBS. And if you're a shareholder, how can you hedge with a put warrant potentially? Now, I have a tool called the Exposure Simulator to really help you see what kind of first of all, what kind of investment you would be putting up, if you wanted to trade a DBS put warrant. The other thing this will tell you is how does it hedge? How does the warrant work in this case if you are a shareholder, right? So I will choose the warrant that is very actively traded today, a DBS put called HAKW, okay, where we saw a lot of investors actually start coming in to buy already. Now, in this case, this exposure simulator tool, you can see this warrant is very cheap. It's only 1.5 cents on the bid, right? So 1.6 cents on the offer. Now, what this tool requires you to do is if you're wanting to hedge with this put warrant, it requires you to tell the tool how many shares of DBS you're holding. So for example, if you're holding on to 2,000 shares, right, whereby now currently with DBS at 49.21, where it closed at 5 p.m. today, your portfolio is worth about 98,000. Okay, and if you were considering how to hedge with this put warrant, how much to put into this put warrant, the answer is 7,400. You see, and this is exactly what I mean. Warrants require a much smaller fraction of the capital outlay that you have in shares. So I repeat, to use this put warrant to hedge your portfolio of DBS, which is currently worth 98,000 at DBS's last traded price of 49.21. With this warrant, which is 1.5 cents, has a gearing about 13 times, meaning it will move 13 times more than DBS shares. You only need to invest $7,400 and you need to buy which is equivalent to about 495,000 units of this warrant. So basically, you go onto your brokerage platform, whether you use a Momo or Philip or OCBC, you basically type in, you choose this warrant HAKW, and then you type in at 1.5 cents, 495,000 units of this warrant. Now, if you do that, what's going to happen is when DBS goes to about 45.50, which is where we think there could be some support, and so, oops, sorry, here we go. So we type in 45.50, yep, which is 7.5% lower from here. What we're going to see is that this put warrant, okay, this green graph here is the put warrant value, and this red bar here is the underlying portfolio value. So if you're currently owning about 2,000 units of DBS shares, if DBS came down 7.5% from here, or you wanted to be a bit more, you wanted to buy this put only when it's $50. Okay, let's say when it's only when it's $50. Okay, then it's about 9% pullback. What you're gonna see on your portfolio is that you're gonna lose $9,000 because DBS has come off 9%, right? With your 2,000 units of DBS shares. But if you bought this warrant, this is going to go up. I mean, you increase the number of days, but basically in a week's time, this is going to go up by 183% from 1.5 cents, right? It's going to go up to 3.4 cents, right? Which translates to a return of 183%. In this case, an absolute warrant return of about 13,800. Why? Because basically you bought 400 over, sorry, I go again. So you're only wanting to short DBS at $50, right? In this case, the warrant amount that you have to pay has gone up a bit more because the put warrant price has gone down, right? So it's gone up to about 7,005, and you need to buy more. Okay, 626,000 units of this put warrant. In this case, it would make you about $13,700 in a week's time. But of course, what we want to do with this tool, and like I said with warrants, you always want to see your maximum holding period. So you keep increasing this, and to the point where the bar now drops such that it's similar to your $9,000 loss on your share portfolio. Okay, so I repeat, if DBS shares came down from $50 to 45.50, you will lose $9,000. Yeah, so we keep increasing the holding period here because we want to see what is the maximum amount of time we have holding on to this warrant before the absolute return on the put warrant it no longer offsets fully the loss on your share, right? You buy this put warrant to offset the loss on your share price. So in this case, you lose $9,000 on DBS shares if it pulls back 9%. But with this DBS warrant, as long as it takes no more than 17 days to pull back 9%, you will make around $9,400, which will more than offset your share price loss, okay, on your portfolio. Of course, if DBS pulled back very quickly, because again, Trump said something or there was a geopolitical crisis that imploded. In this case, it only took 5 days to come down 9% because it's hit such a big resistance level. Then, of course, you're going to make more in the put warrant to more than cover your loss in the shares. But basically, what this tool says is that if it takes about 17 days, right, for DBS shares to come down 9%, you're going to make $9,400 to offset almost, nicely your loss in DBS shares. But what happens if DBS takes longer than 17 days to come off 9%, right? Before, it finds some support here and then it continues to go higher. What's going to happen is with this put warrant, you're actually going to make less money, okay? Let's say if it took 20 days, maybe let's say it took 25 days, you're actually going to make less money on your put warrant, which will not be enough to cover your loss in DBS shares. So if you're buying this put warrant as a hedge, right, for your portfolio of DBS shares, you need to pay attention that in this case, even though the warrant has gone up by 83%, this put warrant, okay, which is magnified, which is about 9 times more than DBS's drop, the absolute return on this put is not enough to offset your loss on the share portfolio. But for the rest of you, because you don't own DBS shares and you're just waiting to do something, you think, oh, DBS is maybe you think overvalued, right, at this point compared to other banks. And at the same time, DBS is really expensive to participate. You need, minimally, even with, 1,000 shares, it costs you $50,000, right? And just only 2,000 shares is already $100,000. And you don't want to, put that kind of money, in there to participate in the move. Then what you can do again is you can, some people like to say the naysayers can, have their laugh by choosing to short via this put warrant. In this case, they only put up $7,500. And what's going to happen is if DBS comes off 9%, in about say a month, okay, they're still going to make 58.3%. So they're still going to make about 6 times more than DBS shares. And so we continue to increase this. In this case, if DBS took about 39 days to pull back 9%, you're actually not going to make money in this put warrant. So in order to make money in this put warrant, you can hold only for a maximum of 36 days. If you're simply just wanting to profit, and magnify your losses, you get some leverage, right, via this put warrant. Then the maximum holding period, just bear in mind, is 36. Why? Because by the 36 day, you're only making a 17% gain compared to the 9% loss in DBA shares. So there's barely any gearing left. It's only about 2 times more, right? So you don't want to hold beyond it. So you're basically saying that, okay, with this put warrant, DBS has to fall by 9% because I think that's where buyers will come in and I want to get out, I want to take my money, right? In this case, you're really hoping that this pullback will happen in less than about 35 days. Hopefully it happens in about 3 weeks, then you make up a 92% gain, right? Which is 10 times and a bit more. Okay, so this is how you can use put warrants to either hedge, whereby if you want to fully cover, your holding period has to be shorter. But if you simply want to just profit from a pullback, which is something a lot of people don't know how to do. A lot of Singapore investors only know how to buy, only know how to go long, but already record high, all-time high. You still there to buy or not, right? So in this case, then you can learn how to profit on the downside. And this is how you can do so via put warrant over DBS. Of course, the same thing can be done with CATL. So just very quickly, for example, CATL is quite straightforward. We've only got one put warrant here. How do I know this? You see EPW, that's a put warrant. Okay, this is also very cheap, 2.5 cents here. You can either short here or you can wait till 435, which was the resistance level that Binny was talking about. In this case, let's say you are currently holding on to some CATL shares already, or maybe you're, like I said, you're not, and you are wanting, if you uh were wanting to cover an exposure of about 350,000 Sing dollars, right? And you wanted to short this, right? You only need to use about, again, a fraction of this amount. You only use about 74,000, and that translates to about 3.2 million units of this put warrant. And what you're going to see is that based on such an aggressive view, if CATL came down to about was it 375, Beanie? You said? Yes, 395.
Yes, correct.
395, yeah. And
395.
that is again a 9% drop. So very similar to DBS, but in another share listed in Hong Kong, a very big name. This one can be very volatile. CATL can be up 4.5% in a day, which is what happened earlier this week. Of course, in down 9%, I think maybe it only takes 2 days sometimes, right? Because as we know, Chinese tech shares are very exciting, very volatile. So in this case, same exercise, you want to know how much you can profit either to protect your shares or simply just to short the stock, right? Something you haven't done before and you think, again, at record high levels, you want to do that, you simply need to just increase. And this is saying that basically, basically you can't hold this warrant for more than 32 days because then you're going to lose the gearing. 37 days, right? So if you simply wanted to short, you just know that CATL has to be down 9% in basically less than 37 days. Like I said, it can happen in 2 days. In this case, if it happens in 3 days, you're going to make 56% returns. Okay, so this is I hope this has helped you understand how you can use support and resistance levels to ascertain how you can get in and out. So you really get in and out based on your view on underlying. You don't need to chart the warrant. There is nothing to chart the warrant. You chart the stock.
Okay,
Bring
thanks
it
a
back
lot,
to you.
Jamie. All right. Now the reason why I've shared about CATL because one of the things I observe is that when price, just hang on, just make sure that I shared my screen. Okay, one of the reasons of looking at CATL was because when price is in the consolidation mode for so long, that means I'm talking about this consolidation mode, or rather this consolidation mode. Two things can happen. One is can break out, because then it has been basing going flat for very long, or is that it's near the high and people think that basically at the high, let me sell it down, it can move down. So it's like in a critical point. So when it's at a critical point, then you might not want to buy straight into the shares. So one of the thing about looking at warrants is your maximum loss if you are investing or trading the warrants is the price that you paid for the warrants. Okay. All right. Now let's move on to the laggards. So I have prepared here three laggards, as in these are stocks that basically had a pattern, but they haven't moved or they hasn't like been able to break its all-time high. So the first one is Yangzijiang. This is Singapore listed. BS6. Now, the reason for choosing this is because Yangzijiang had a high at about 330 and it moved down low of 180 and has been consolidating for a period of time starting from about March here. So this consolidation resemble an inverted head and shoulder. Essentially, we term this as a reversal pattern. So when I was preparing this, I marked in this level here at about $2.37 as a resistance level and priced moved off. That means price has broken out. So when it breaks out, that means that this 237 becomes a support level because you can see that that was the breakout point. However, if you were to track today's Yangzijiang price level, it's at $2. I just want to make sure that I have the right closing price. Yeah, my list is a little bit long. BS6. So today is closing and it's closed at $2.53. So what I did is to map out the resistance level here. So the highest resistance level was about 250. So by trading and closing today at $2.53, this means that this resistance here, which is this one, okay, that's equal to 250 level here, because right now it's trading at 253, right? So that's 253. This means that this resistance had been broken already. And because it's broken, then this resistance in turn becomes a support level. And we might be seeing that Yangzijiang might be moving towards the next resistance level. That's about 270. All right. So same thing. Yangzijiang hasn't broken out of its high point yet, but it made this inverted head and shoulder pattern. And so far it's had already moved off, okay, breakout of a key resistance level. So that's about 250 level, right? Okay, so the next stock is SGX. Now, same thing, this is a laggard. SGX been moving very well. As I said, that it has this basing pattern here. So that's a base pattern around here. And after it broke that basing pattern, it starts to move up. But I term this as a laggard because then it hasn't broken out of its all-time high. So same thing, when it's at this level, you might question whether SGX will continue to have strength to break above it, or that the all-time high it's going to act as a resistance. So on the technical front, we will assume that the all-time high, or a high that previously blocked price from traveling higher, it's going to act as a resistance. Okay, but again, that at this point we do not know whether it is going to go higher or it is going to be resisted here. So if you are looking at, for example, if you are already holding on to SGX and you are looking at further action, then you might also want to explore instruments to help you to hedge. But do observe these two levels here. One would be 1620. So that would be the first resistance level. So today, if I just browse through SGX price, let's just get you the last price of SGX. is trading at 1593. So it's being like blocked by that 16 level resistance. And of course, that if price is to move down towards the support level at 1480, so this might becomes another support level where people might be looking at. So where is this support level? I mentioned earlier, so this support level was a previous high. That means that if you get resisted here, at $16, it might just head down towards the previous high that is acting as a support level. So this will be your 1480 support level and the two resistance here. Of course, if it breaks all-time high, then SGX is likely going to gather strength like what we saw in DBS, for example. Okay, the last one that I like to talk about is new. Okay, now if you look at the news, NEO recently moved up. It's one of those stocks that have this not only dual listing, it's listed in the US, it's listed in Hong Kong, and listed in Singapore. But it is known as a stocks that is downtrend. Downtrend means that if you observe NEO, while its competitor like Xiaomi or BYD, they are on the uptrend. NEO is like that. Okay, has been actually moving down. But what recently caught the news of NEO is that they launched a new SUV that's 3 rows, and the market sort of like it. All right, so the new SUV is Novo L90. Just now I was just looking at the video and it's really seemed impressive. Now, second is that NEO changed its battery technology, or rather the way that people charge the car, is that they don't charge the car. You can just go into a port and to do a battery exchange. So this pretty much sort of allay fear of not having enough charge to last through. It's like you go to the petrol kiosk to pump petrol, you go to the port to go and change the battery, a full battery, fully charged battery. So when they launched the Novo L90, NEO moved up, and it's out of the downtrend. So these would be the downtrend trend line. So around here, at about $4.30, I make a video in YouTube and I talk about NEO breaking out of this downtrend. So when it breaks out of this downtrend, it means that this downward movement from last year, October, until now has already been broken. So what NEO did is over the this week of trading, what it did was to make a higher high. So technically, this was a high level high, but this was a lower high, right? But what NEO did was to make a high that's higher than the previous high. So like this, okay, higher than the previous high. So this is the first sign from the technical point of view where we observe these stocks might be reversing because that bulls are more willing to buy at a slightly higher price. Okay, so this is the reason why I think that this could be a laggards. But again, that NEO is in this long-term downtrend. So fundamentally, it might be still dubious in terms of its turnaround story. And hence that I term this as a laggard, but I also put in a resistance that's really very near at about 570 and put in a support at 470. All right, essentially, NEO could be just a trading stocks to consider from the trading point of view, which is for short-term trading. And I thought that it's good to bring this up because then Jamie might, want to share the performance of NEO if you had caught somewhere at here when I did the video at 4:30. Okay, let me just look at this. Okay, so I'm just gonna pass to Jamie. Maybe she has something to add on NEO or something like that.
Yes, so I love stories like that. This is why we love working with Beanie. So Beanie was saying like you can follow her video and all that, but you can also follow us on our newsletter. Why? Because I just show you very quickly. This is our website and our daily newsletter. They can be found in this section, warrencircum.sg, morning market buzz, and I'll just show you an example of NEO. We basically quote and share stories like that where an expert has said, well, asked, is it time to buy new, and one key sign and the levels that she was looking at then. And of course, the rest is history. since 17th of July. I'll show you very quickly what NEO has done. The call warrant that we talked about, or rather Beanie talked about in the video, this call warrant has basically gone up 55%. Well, during the day where we highlighted it today, it was up, 6 times more basically. Sorry, more than 3 times more. So it was up about 20% during the day and then it backed off, towards close. And of course, with a warrant, you would have made 55%. In the stock, even without leverage, it's an impressive 70% in just 1 week, mind you. So, I mean, again, for the rest of you thinking, I missed that out. And, but Beanie at the same time is saying that this is more a trading stock. We're not sure if the long-term trend has reversed. Great if you manage to, if you think it's going to reverse and it's going to, turn bullish. Of course, maybe you probably want to buy the shares and just ride it, for a long time, right? But if you're not sure, again, you think this is a trading story and you've obviously missed this 17% in a week, kind of move. Again, what can you do? You can use just a fraction, a smaller capital outlay compared to what you will pay in the shares. Now, this is in US dollar, by the way. New shares in Singapore are traded in US dollar. You can instead use just a smaller capital outlay, a fraction, 6.5 cents Singapore cents, to invest in the new warrant instead. And how will it work? Well, I show you a couple of tools. I show you how you can use the exposure simulator to estimate your investment amount and how it can hedge right in absolute returns versus your loss in the shares. I've showed you the selector tool where I said you can use it to choose between and amongst different warrants. Of course, calculate your maximum holding period based on the number of weeks. But I just want to show you this last tool, and they're actually all the same. The concept of usage is the same. You need to know where you want to enter, where you want to exit, where you want to cut loss, and most importantly, how long a view you can afford to have. What is the maximum time you can afford to have that kind of view? But of course, as long as the stock reaches your target exit level in a short period of time, you don't have to wait to the maximum holding period. You just get out because your gains will be more magnified compared to if you held on to it for a long time, right? So okay, back to Neo. What happens? What's going to happen if you already missed the boat, right? 490. Well, earlier, when Benny talked about it, hasn't you missed out on it, then where can you get in, right? You didn't get in at about 440 in the stock. Now it's already 490. But Bini just mentioned potentially what exit level? 530?
I think it was 570.
570, right?
Yes.
So that's the next level that potentially we don't know if the trend has changed, but even in the short term, it could go up because again, the short term catalyst is the launch of this car. Of course, if more reports come out about, the sales of it exceeding analyst expectations, it could provide it another, oomph, right, and go up more. Now, in this case, 570 is about 16% from here. And some of you are saying, 16% is a lot. Well, it went up basically 20% in a week. So it can go up a lot. This share, it's quite volatile. EV name, it can go up a lot, within a short period of time. Now, earlier the selector tool I showed you the estimated simulated returns in number of weeks. Now this tool is a bit different. It shows you based on days, the number of days. It shows you based on the estimated date you can look at. So in this case, again, this tool is especially good where you want to trade a stock using warrants closer to say earnings, or specific dates, like this month end, we've got the Politburo meeting in China and we think we don't want a position beyond that date. Or, previously people were looking at the 1st August tariff deadline, for example, right? So if you have those very specific dates in mind, you can then use this tool instead. Okay, but same thing, you type in your entry, obviously if you want to enter now, you can, or you want to wait for a pullback, to a lower support level, you can as well. But let's assume that you think you want to ride the momentum, right? You want to get in here, you get out here at 570. Now, the next step to do is, hopefully you already know this by now, but you increase the number of days because you want to see how the warrant price, the warrant percentage is going to move. Now, what this says here, this tool says is that if new shares were to go up 16%, in around 7 days from now, a week from now, this warrant will make you around 48%, which is 3 times more than Neo shares, right? Just now we've seen examples of DBS, of CATL moving about 7 times, 9 times more than the shares. How is it that this new warrant is only moving 3 times more? Well, the answer and the simple answer to that is different warrants have got different gearing levels. In this case, this new warrant has about a less than 3 times gearing level. So there are different gearing levels that you can choose from across, different warrants, right? For all covering different underlines. In this case, it's only about 3 times. So the gearing is not a lot, but hey, 16, well, we say the gearing is not a lot, but this is about 50% gain, in just about a week's time. Of course, same exercise, you continue to increase it. I said NIO is very volatile. It's basically moved up 2 weeks ago, 23%. This week is up about close to 20%. You know, it's moved up about basically 50% in just about less than a month, right? So this is probably nothing. It will take easily 7 days or even just a few days to move. But we want to know, okay, what's the maximum amount of time it can take to move? In this case, continue to increase it, and you see that NIO should move up 16% in no more than about 2 months, because then your return on the warrant barely has much leverage or gearing anymore compared to underlying. So NIO shares have to move 16% in no more than 2 months, around 60 to 63 days from now. Okay, that's your maximum holding period. So, with the interest of time, I'm not going to demonstrate more. I'll just pretty much as you know, but hopefully you understand how warrants work by now. I think the next question to ask naturally is, what if NIO doesn't go up to 470 by exit level in about 60 days? The answer is cut your loss. Cut your loss. Why? Because if NIO now was to be, say, 550, right? You make less gains, but you should get out. Or if NIO was only at, say, $5, you should get out, right? It's a loss, but you should get out. Because why? Because even if NIO went up to your target exit level, which is 16% from here, and you continue to hold it for longer, you don't cut your losses, right? What's going to happen is, you see, you hold this 112 days from now, you're actually going to make a loss. So all the more, if NIO doesn't go there, you're going to make an even more magnified loss. So in other words, this tool is trying to tell you that basically the maximum holding period is around about 60 days. So if NIO is not there, you shouldn't continue holding on to it. You should actually exit. All right, because in this case, the stock did not go according to the view, and the maximum did not go to your view within the maximum holding period. So that's something you need to note when you're using a leverage product, right? Because the holding period usually is not long. If you want it to be very long, you can. Then NIO needs to go to something really high from here. So for example, if NIO goes up by about 43% from here to $7, you can hold it to the end of its life. About half a year from now, you're still going to make, geared returns of more than 2 times, about, 2.5 times, about 97%. Okay, so if you want to hold on to the warrant for long, that's okay. You just need to make sure that the stock is moving a lot in your favor. Okay. So with that, I come to the end of the demonstration.
Thanks a lot,
I just
Jamie.
want to remind you that, every leverage product comes with risks. What you have just seen is, how losses can be magnified. Gearing is a double-edged sword. You've got expiry dates and holding costs, so please don't hold it like you will with shares. Attend a lot of sessions with experts like binni, because they tend to tell you the short-term, support and resistance levels to look out for. And in the case of NIO, for example, that view was met in less than a week, right? And you were able to trade out of it with, 60% return via the warrants already, and that's in 1 week. So you don't need to hold on to a position for years in order to make the kind of return. You can actually make the kind of return in a short period of time. So you just need to know the levels, get it from an expert, so you have better clarity. And just remember to use our tools so that you can maximize your chances of making leverage returns with such a tool, right? Buying and holding a warrant is typically not going to make you money, right? And that's how you can lose money, okay? So that's
Okay.
something you need to pay attention to.
Thanks a
Um,
lot, Jamie.
yeah, and with
Yeah.
that, I believe we've come to the end of
Oh,
this sharing.
we're
Oh,
not yet done.
we're not yet
We
done. Binny has got more.
Yeah,
ideas to
I think
share?
that we have a quiz, right? Are we
We
going to give
do,
a
we do,
quiz?
we do.
Yeah,
We do
so
have a
let's
quiz.
not go
Um,
yet because we have a
yes,
quiz.
but we're going to give away five $10 vouchers for those of you who have listened up to this point already. You might as well stay on for longer to see if you can
Yes.
win money. But maybe before we go there, do we just take some questions from
Yes, we
people who have?
have questions. I think I just read out the questions from Pigeonhole.
Okay.
So I think the question is that will there be a recession in Singapore, in US and Singapore? And if so, when will it happen? I think it's very difficult to talk about when will it happen. All right. But I just want to give a little bit of a background of why we are having a rally right now. So of course that we have a slightly better situation in terms of the tariff. But one of the things that Trump is doing right now is he's trying to fire power. In other words, he's trying to cut rate, or rather trying to get US Fed to cut rate. So just now, I mean, the news just came in, ECB, which is the European Central Bank, they just keep rates flat, constant right now. They are not hiking rate, they are not cutting rate. So in other words, the market is expecting that US, with Trump's stand, US to cut rate, and rate cut is essentially good for the stock market. Why is that so? That means that your interest would be lower. And in other words, right, if Trump is to cut rate, then US dollar would be going down, and we have like the treasuries yield heading lower. So then if the yields are lower for the treasuries, then where will you put the money? Then you'll be putting money in the stock market. So this is the reason why we are seeing across the board, US, Singapore, and even Hong Kong, or moving higher in anticipation of a rate cut. Now, why do I want to bring this up is because let's say when there's a recession, if you are looking at a recession, what will the let's say the central bank do, right? They will probably want to ease the situation, and they probably might want to cut the rate faster. So if it's a recession, that is not going to be very alarming, but it's just a recession. Probably we're going to have that rate cut even faster. And these might, in my own personal opinion, this might also aid the stock market in heading higher on the rationale that rate cut, it's going to provide cheaper money. Okay. That's the only one question that we have. But if you do have other questions, you can continue to write in Pigeonhole. All right, but I think that we should just continue with the quiz, right, Jamie?
Yep. So I'll just very quickly tell you all how you can participate. So I'm going to ask a question. So of course we're all on the web, so I can't see you raise your hand. So it's going to be first come, first type, right? I'm going to ask five questions. So the first, to type out the answer on the chat to everyone. So make sure first of all your chat is showing to everyone. Okay, and the first to type the answer there will be the winner. And you will get $10 voucher, after the webinar. But in order to receive the voucher, you will then, if you are the winner, and you can see that you're the first, we'll obviously announce the winners at the end of the quiz as well. But then you need to switch to typing to everyone, to just the panelists, to all panelists, your email address, so that the SJs can get in touch with you to give you your vouchers, right?
So don't
So
leave after this, right?
yeah, so I repeat, so I'm going to ask a question, which you should be able to easily answer if you've been paying attention. And the first to type out the answer will be able to win. Okay, will win. Okay. So yeah, if we're clear, just so you know, if you have been paying attention and you keep getting the answers right and you're the first to type it, you can only win once. So once you have won and you can see you're the first, please give others a chance, because even if you type the answer and you're the first, you can only win a maximum of $10 vouchers each, okay? All right. If you're ready, we will start with the first question. Now, what type of warrant would you buy if you were fearing a pullback in the share or in the broad index? Whoa, everyone's suddenly typing very fast. Just now, Binny and I asked, if you guys have eaten, the answers they come out in a fury like that.
Yeah,
It's quite
this was a
funny.
trial run to make sure
Yeah.
that we get the chat correct.
Okay,
Check
great.
properly
Hey,
done. Yeah.
thanks for all the answers. Well, I'm trying to scroll up to see, the first winner.
CJ.
Is it CJ?
Yeah,
Yeah, I'm
CJ,
seeing
please
from,
send an
yeah.
email to
Great.
us.
This is the easy one. Okay. And then, of course, the questions are only going to get harder. But okay, so CJ, you can't win the next one. Okay. But thank you for getting this one right and for being the quickest. Now, second question. What website should you refer to when you're trading warrants alongside your brokerage trading accounts or platforms? What website would you be
I think
using?
we need that website address. Do we need to?
Yes, you need to type the website address.
Yeah.
Okay, well, it's coming. Beanie, will you announce the winner for
So we
this?
have
Is it Cyvis? Oh, no,
Savis only
Cyvis
type
just only type
warrants.
Warrens.
Yeah, so it's
Manoj,
Manoj.
Warren
Yeah,
dot
correct.
SG. Ah, that's not
Warrens.sg.
correct either.
Yeah, so it's
Well,
well,
warrant dot com dot SG. No,
warren.com.sg.
you missed out
Yes.
an S. JN, you had triple R in there.
So it's
No,
Hlink,
it's
warrens.com.sg.
H-Link, warrens.com.sg. Perfect. Okay.
Yes.
Well, that one was quite nice and exciting.
Yeah. So
So
please
fastest
send
fingers
us.
doesn't necessarily mean you are correct, huh?
Yeah.
Okay.
So Hlink,
So
please send us an email to all panelists. All
yes,
right.
all
Yeah.
panelists after this. Now, okay, now this third and fourth and fifth question, you don't need to be as accurate with your answer. You know, you even if you did a typo, but if you can tell what you're typing, you win. Okay, how about this? Because it requires more typing than the first question. Now, third question, what is the tool you can use to estimate your warrant investment amount? There is a tool that we designed to help you estimate your warrant investment amount based on the capital exposure of the shares that you would otherwise invest in. What is the name of the warrant tool? Uh, Someone's typed Mei Wang, you've typed simulator. Um, That's not correct. Unfortunately, you missed out one word. So if you had typed simulator wrongly, that's okay also. But you missed out the key one. And Eileen got this correct. Eileen is the first one, right?
Yes.
Binny?
Yes.
Exposure simulator,
Exposure
that is the
simulator.
tool, okay? CJ, you typed out your email address to everyone. Just note, don't type it to everyone because then unless you want the other people to contact you, okay? Type it only to us, and you might have a typo, I think, with the Y mail. Okay, fourth question. Which is the tool to compare the potential returns you can make compared to other warrants available? What is the tool to select and compare the simulated returns compared to other warrants based on the number of weeks of holding period? JN got it correct. It's the warrant selector tool. Yes, the warrant selector tool is one that you can easily use to select the warrant you want to trade compared to all the other warrants available, because it will tell you your simulated returns based on your target exit level, entry, exit, as well as your maximum holding period. It's going to tell you how it's going to perform on a weekly basis. Okay? All right, so JN, do chat us privately or with your email address. Now, last one, don't lose hope. Which is the tool to simulate your holding period based on different entry exit levels and the days, the number of days or date you can hold on to the warrant until. Which is a tool to simulate your holding period based on the number of days to hold on to it or the dates that you can look forward to exiting the specific date. Val got that correct. It's the warrant calculator. All right, sorry. Kenneth is not the warrant comparison tool, it's a warrant calculator. Salvis is not the warrant comparison calculator. It's the warrant calculator. Okay, and with that, we've got winners for all 5 questions. But winners, do email us, or rather chat us, change to everyone in your chat to all panelists, and then send us your email address there so that we can get the SGX to contact you with your
Yeah,
$10
so
voucher.
I haven't received from Hlink your email address, and Val, please send it to us for CJ, for Eileen, and for Jay. And yes, I've gotten your email address.
Okay? All right. Thank you for tuning in. Of course, if you want to, Binny, are there more questions you would like to answer on
Uh,
Pigeonhole?
that's all for the pigeonhole.
Okay. I think we had some people asking if you could send slides of this presentation
Yes, I
after
can
this
send,
session.
but then they need to contact SGX registrar for that. Yeah.
Okay. What email address should they send it to?
Uh, Adrian, what email address should they send to? Can you please type to everyone? Thanks a lot, Adrian.
Yeah. Okay. So email the email
Register
address
at
that Adriel.
sgxacademy.com.
Yes.
Yes,
Okay,
you can.
register at sgxacademy.com if you want the slides to today's show. Or otherwise, thank you very much. Good luck with markets. It's very exciting times, and hopefully you use warrants to grow your returns. Thank you very much,
All right.
everybody.
Thank you. Have a good
Good
night.
night.
And we received all the emails already, so you SGX will contact you guys for the price. That's all. Thank you. Bye bye.
Thank you. Bye.